This holiday season is looking like it may be a frosty one. Earnings this week showing that they are adjusting their spending in the face of higher prices and putting off some of those big ticket purchases. One key theme from this earnings season, yes, retailers are reporting profit beats, but when you take a look at the results from Target, Macy's, Gap, just to name a few, same-store sales continue to decline. A challenging setup here heading into the end of the year. Here with more, we want to bring in Dana Telsey, Telsey Advisory Group's CEO and Chief Research Officer. Dana, it's great to see you here. So I'd love to get just your perspective from the retail results that we've gotten over the last several weeks. What does that tell us just about what demand is going to look like this holiday season?
Well, we've certainly seen that in the third quarter. The month of October was weaker than September, and it's choppy in November. The unseasonably warm weather was an impact, but let's also call it what it is. It's the level of demand from consumers, particularly at the lower to middle income tier. With rising interest rates, their savings down from what they were during the pandemic, given no more stimulus that's out there, and the real focus on innovation. Consumers, you can call it choiceful, discerning, careful, cautious. They are more cautious with their spending dollars, and to get them to buy, it has to be something different and unique. So I think it's going to be a cautious season. That's why the 3 to 4% holiday season sales gain that we're looking for this holiday season seems more likely. It's below the trend average, what typically is nearly a 4% increase. And with Christmas falling on a Monday, delay is what consumers can do if they think they're going to get a better deal.
And Dana, with all that caution, how is that translating into the luxury side of the market? For all the talk of the Magnificent Seven in the U.S., we had another Magnificent Seven in Europe. Those stocks kind of fell off over the last few months. What is the status of the luxury segment, and what bodes for the Christmas and holiday season here?
The luxury segment has seen moderation too. We've definitely seen European locals slow down their spend. You're not getting the rate of international tourism from those from China, and it's been softer. I think the only ones that have really held up well, it's the Hermeses of the world where prices doesn't matter. So the uber wealthy can continue to spend, but the upper income is not spending at the same rate. In addition, there's more choice. Experiences versus goods. Keep in mind the Taylor Swift concert this past summer, on average, including the tickets, people spent nearly $1,300. So it shows they'll spend for an experience, not just a good.
Dana, what do you make about what's going on over at Abercrombie? When we take a look at these retailers across the board, there were several things to take issue with or be a bit disappointed when you take a look at these results. But comparing that to what we heard from Abercrombie, it was hard to find any sort of weakness in this report. What are they doing that some of their rivals are not, that's giving them the edge in this environment?
You're absolutely right. Abercrombie's been a pick of ours as a favorite for 2023. And the combination of the work that's been going on that Fran Horowitz, the CEO, and her team have done over the past 3 years, whether it's data and reinventing the brand. Look what's happened. The core Abercrombie brand has become a lifestyle brand. The new stores that they're opening in neighborhoods like in Flatiron in New York City, they're smaller, but they're very productive. You look at Hollister, where it's had its second quarter of consecutive sales growth. She's put the data together of who her customer is, offering them what they want. It's unique, it's different, and it's an environment that people want to go together and shop and convert. There's more to come as some of their smaller brands like YPB and Gilly Hicks, along with the remodelings of new stores and the strength of the balance sheet, give it a path for growth in 2024 also.
So Dana, compare that to what we're seeing play out right now at Gap, because yes, there were some reasons to be a bit encouraged by the results that we are getting. Obviously, the new CEO at the helm, Richard Dixon, in terms of what they are doing to reshape their brand, trying, it sounds like, maybe to take a page out of Abercrombie's book in terms of exciting their lost customer. Are they moving quick enough? And what do you want to see play out in that turnaround plan?
There's been a lot of change at Gap. And keep in mind, yes, it comes from Richard Dixon having just joined nearly at the end of July after having been on the board since November. They put in a new leader at Old Navy last year from Walmart. Keep in mind, when you think about Gap, it has a business with Old Navy that caters to a lower income consumer who's more pressured these days, whether it's from rising rates or you don't have the stimulus benefit. It did improve to a positive 1% comp, the first positive comp that Old Navy has had in nearly 2 years. So could there be the benefit of a trade down of consumers trading down? We all know Gap needs to be redone. Where the Gap needs to be redone in remodelings of the stores or remodelings of the merchandise, there definitely is more to do. And we've seen Banana now introduce home, and Athleta just got a new leader a month ago. It took Fran 3 years to put all this together with her team. Richard Dixon has been there less than 3 months. So more to come.
Dana, we got time for one more here. I want to talk about beauty, shifting gears for a second. We've seen a pickup in the stock prices. Sally Beauty up 23% over the last month, e.l.f. 13%, Ulta 9%. Is this, and for the year, it's kind of been a mixed picture as I'm looking at the Wi-Fi Interactive. You got some big winners, some big losers here. What's your take on the space?
I think beauty is a category that was called out in the third quarter by so many companies, whether it was Macy's, whether it was Nordstrom, whether it was Kohl's. It's been a category of strength. We've had definitely headwinds. I mean, you look at Estee Lauder, who has dependency on China to a great extent. So there's differences happening there. I think the category continues to be in demand. I think Ulta definitely is a winner for holiday 2023.
All right. Thank you, as always, for stopping by. Dana Telsey, Telsey Advisor Group's CEO and Chief Research Officer.